All right, everybody, welcome to the Paycheck Protection Program. This is one of the first events for the New York Chapter Punjabi Chamber of Commerce. If you already don't know, please check out the punjabichamber.com for more information. It's free to join. Also check out our social media pages from Instagram, Twitter, and Facebook. This event is being streamed on several different resources and media platforms. Today, we'll be talking about the Paycheck Protection Program, about the new stimulus plan, the $1.9 trillion, what's happening, how small businesses can take advantage of it. We have four amazing panelists coming on board. There's a lot more we'll discuss about the Punjabi Chamber. If you have questions, feel free to submit them in the chat room. FAQs and other things will be distributed during and after the event. So without further ado, I'll hand it off to Kumar, one of the founding members of the Punjabi Chamber of Commerce. He's a trustee and a board member. He's the CEO of his own capital funding company. He's got 25 years of experience in this industry in the New York region. He's a veteran officer. He's an amazing board member and founding member. I'll hand it off to Eric now to introduce everybody else on the panel. You're on mute.
Thank you, Vijay, for a nice introduction. Good evening, Sat Sri Akal, and Happy New Year to all our viewers. And I would like to welcome on everyone to this exciting webinar about the PPP loans, which is Payroll Protection Program, round 2. And to all our listeners, first of all, I hope you and your family are doing well during this pandemic. And also would like to thank especially our South Asian community who are in the medical field. You guys are the frontline workers and fighting this battle. And so we salute you. We thank you for your service. And this evening, we get one of the finest panelists we can think of from the banking and financial industry. And without, I would like to introduce them. We have Sanjay Mukhi, Vice President, City National Bank. Sanjay has over 15 years of experience in business banking, working with the large financial institutions. He manages a portfolio for companies who have revenues between $5 to $50 million. And he started his retail banking career back in '92 with Chase Manhattan Bank, and also completed their management development program. He's a master's MBA from Hofstra. We share that with Hofstra University, and then have an electrical engineering from Manhattan College. So Sanjay, we welcome you.
Thank you.
Our next panelist, we have Ramit Arora. He's the co-founder and the president of Biz2Credit, a well-prominent lending platform or lending company in the South Asian community. He heads, in Biz2Credit, he heads the credit and the sales operation. Over 10 years of financial working experience with Citibank and Xerox, and also have a great experience in risk management. He has a bachelor's degree in business management and master's in accounting. So Ramitji, welcome aboard.
Thank you.
And last but not least, our Chetan Dogra, a CPA. He's a licensed CPA for the New Jersey and New York area. And before founding his own private practice, Dogra CPA, he worked with one of the big houses, Price Waterhouse, and other big accounting firms. And he's also very frequently engaged in enjoying advising clients on a larger scale in taxes, M&A, audits, appeals, and financial reporting. So Chetanji, welcome you aboard. And thank you for joining today.
Thank you, Eric, for the introduction.
Yes, so here we are. What an exciting evening. We got so much exciting stuff happening coming out of Washington. Right around Christmas, President Trump signed this new bill for $900 billion, which really opened the doors for this PPP round 2. And then recently, last week, President Biden announced a $1.9 trillion, and the word is trillion, dollar stimulus package to help revive the economy. And obviously, a lot of that is going to be focused on the small business, SBA lending, and all that. So starting with that, Chetanji, just help us out, our viewers. For those who may not have an idea, what is this PPP loan is about, or what is this PPP loan program round two about? Give us a few highlights.
Yes, definitely. So this PP round two is basically an opportunity for businesses who are, facing a downturn. They are experiencing economic hardship during this time because of the pandemic. So this program is aimed to support them, for basically for a working capital for a few months.
Okay. And since you're a CPA and you do a lot of audits and you do a lot of compliance for your clients, how long, if I'm the small business owner and I'm applying for this PPP loan and I do get this loan, how long do I have to keep this records to avoid any future potential audit by IRS or SBA or US Treasury? So could you highlight that a little bit?
I think this is a very good question. To avoid any audit in future, the guidelines are that you keep the documentation for 4 years for the payroll records, and then other supporting document you should keep it for 3 years, and that 4-year period starts from the date you apply for the forgiveness.
Okay. So, and this is also to avoid a potential audit and all that. So we need to keep these records.
As long as you're keeping all the records intact, you have a supporting documents to prove
and
would
you also suggest, since all our small businesses have an accountant or a CPA like you, to have consult with their CPA or accountant to have, so they have a copy, because obviously they need to be filing, they need to inform in their next tax year, the 2021 tax year, that how much loan they took from the SBA or how much of that is forgiven. So their accountant should be updated too, right? They should keep their accountant in line.
Yes, it's definitely for two reasons you should reach out to your professional. One is that this time that eligibility criteria is a little bit complicated. So you want to make sure you're getting the maximum borrowing out of this program. Second thing is, if you are with the accountant, they'll make sure tell you what are the compliance required. But I think the most important benefit here is that this money you're receiving, if it is forgiven, you're getting a double dip in terms of taxation. You're not paying any taxes on the money you're receiving. And then the funds, if you're using for qualified cost, they'll be tax deductible too.
Okay.
So
thank you, Chetan.
Definitely you need to reach out to professionals.
Thank you, Ji. So I would want to be fair to all our panelists. So we'll move on to my friend Sanjay. So Sanjay, if there is a borrower out there, a small business owner who either missed it or for whatever reason did not apply for PPP round one back in summer and August, can he apply for both, for number 1 and 2, or can he only apply for 1?
So so if they missed it in the first try, and they are eligible to open up as a first-time borrower in this opportunity that they have right now, so they can apply using their payroll documentation from 2020 compared to 2019 as a first-time borrower.
That's a first-time borrower. Okay, got it. And if you can say that in one sentence or a couple of sentences, what is the biggest common mistake an applicant or a small business should look out for, so they don't make that mistake and don't get audited or get less money? Because with my experience with the PPP doing so long, some people I learned, they came back to me and they said they got less money than the last time. So what is the common mistakes they should look for, or avoid it? I'm sorry.
Right. I mean, listen, I think the biggest I would say to anybody is like Chetan ji said, consult your CPA before you're submitting these documentation to a financial institution. Every financial institution has or lender has the portal and is doing the calculations to support it. One thing PPP round 2 has made it easier is, if you're requesting less than $150,000, you don't need to supply the supporting documentation now. You can supply it later at the time of forgiveness. So depending on if you took if you got a loan in the first round, and if it was less than 150,000, and if it's going to be a similar number now, it makes it easier. But I always advise clients is to make sure you run this. We're obviously, as a financial institution, going to review your documentation, but make sure you run these numbers with your CPA so that, one, you're not over borrowing, where it may not be forgiven and becomes a loan, even though it's a very cheap loan, and more important, you don't get less than what you should.
Thank you, Sanjay. Ramit ji, I would like to ask you, what is the time frame is being used on the payroll when we are calculating how much we qualify? Can you elaborate on that a little bit?
So time frame is, it's based on the election of the borrower. They can use 2019 payroll or 2020 payroll, or the last 12 months of payroll, which anyway equates to 2020 payroll. So basically, the borrower has the choice to decide which year to take as the base year for calculating their payroll.
Got it. Also, I'm just quickly also in between, I'm jumping to some of the Q&As from our listeners. So we have an anonymous attendee. He or she is saying, I have multiple companies, but only one company is running payroll. Does it impact my eligibility?
No, it doesn't impact the eligibility, because if there are multiple companies and only one is running the payroll, then they would just look at the company that is looking at the payroll, and then they have to just aggregate the number of employees and make sure the number of employees are less than 300. Okay. So that is the main criteria, in this round. Right. Right. And if they are applying for draw one, they have not taken the draw one earlier, then the 500 employee limit applies.
The 500, the cap on 500 is exactly there. If they have not taken draw one, PPP one, they can go up and they have up to 500 employees. They are eligible. In case in PPP round two, they have to have 300 or less. Yeah. We have another anonymous attendee. It's actually the way they wrote the question. I'll repeat that, but I know what they're saying. So are the 1099 payments eligible? Or I would add to it, are the 1099 payments eligible? Or if I am getting a 1099, am I eligible? There are two separate questions, but they're all kind of tied into together.
I would say 1099 payments, if you're making the payments, then they're not eligible to be counted as payroll cost. If you're receiving 1099, then it is, and if you're filing your Schedule C, then basically your loan amount is capped at 20,833, because, the maximum profit that you would have that you can take is 100,000 and divided by 12 and multiplied by 2.5, or 3.5, depending upon your next code. And so it's capped at that amount,
Yeah, correct. That's right. So just to refresh, the employers who are giving out 1099, like construction people or limo owners, they are not eligible to apply for the PPP for their independent contractors. However, the independent contractor on the other side, who's getting a 1099, is capped at $100,000 net on their Schedule C divided by 12, which is $833 times 2.5 times. So about 20,000 and change, right? So now back to you, Ramit ji, again. Should there be a 25% reduction in revenue to qualify for the round two?
Yeah, for draw two, there should be a 25% reduction. And if your loan amount is below 150,000, then you have to provide the documentation for that reduction at the time of forgiveness. And if your loan amount is greater than 150,000, then you have to provide the documentation at the time of funding the loan. And you have to provide either your quarterly financials. You have to show one quarter, you have to compare any of the quarters compared to 2019 for 2020 to show the reduction in revenue. And you can document it through your quarterly financials, which have to be certified and signed by the borrower, your tax returns, or through your bank statements.
Okay, so we had another listener, Sandy, who you answered it. What documents should be provided to show the 25% reduction? So the documents you just mentioned are the ones they have to provide at the 25% reduction, correct?
Yes.
Okay, so may I add on that as we discussed earlier, if the loan amount is below 150, they do
Yes.
not need to provide the documentation now. However, they may need to provide that at the time of forgiveness
Yes.
documentation. So at the moment, for 150 loan amount of 150,000 or less, they do not need to provide those documentation. Chetanji, we have a gentleman, we have one of the listeners, his name is Rahul. He said, my new organization is launched in November of 2020. November 2020. Is he eligible for the PPP round 2?
The answer is no. The applicant has to be in operation prior to February 15th of 2020.
Thank you. And with that, we already answered this other call where they have multiple corporations, and they have multiple corporations, and only one of them is okay. So Sandy has another question. Okay, so Ramit, could you please repeat that, because I believe a couple of our listeners didn't understood what you said about the 25% reduction, what they need to do. I'm sorry.
Like in terms of the documentation, or?
Correct, in terms of documentation, yes.
So I will say that, and Sanjay ji can correct me, because Sanjay ji I know was sending very detailed emails, in the last couple of days on that. But it's basically their quarterly financial statements, where they can document the reduction in revenue from 2019 to 2020. They have to be certified and signed by the borrower. It could be either their tax returns or tax forms, and it could be either their bank statements, which can document that the reduction in revenue has occurred from 2019 to 2020.
And Chetanji, the question goes into your field. What are the tax implications and the treatment once this PPP loan is forgiven?
Yes, as I told before, you get a double dip here. So the income you're receiving is not reportable as income on the tax return. Second, as long you are using these funds for qualified expenditures, you are also allowed to take a deductions against those expenses. So you get a double benefit basically.
But can I add something? Certain states, because we have our listeners throughout the 50 states of
Yes.
certain states are using for the state tax return. Aren't they using this as an income? Aren't they asking the borrower to disclose this as an income?
Well, certain states are considering it. I don't know if the rules are any final, but I think most of the states follow the IRS.
Right.
So I'm hoping they're not going to tax it, but we don't know yet.
We don't know it yet.
They're in terms final rules right now, but not.
But by the time our listeners are ready to file their taxes with their CPA, the ruling will be finalized by then, which is we're hoping
Yes.
by March, April, we will do that. Right.
But things are very fluid right now. So we are getting in terms final rules from the SBAs, IRS, the new rulings are coming in. So we just need to be tuned in and see what's coming in. But mostly in the state tax treatments, they mostly follow IRS.
So Sanjay ji, I would like to jump on a topic with you. I know you and me, we share a lot of hospitality and restaurant owners. So is that we have heard that hospitality and restaurant business owners are getting a better preferential treatment, being they are hit very hard on this industry? You're mute. You're on mute. Sanjay, you're on mute.
Sorry. So obviously the hospitality industry, the restaurant industry, the hotel, they've been hit with not just because of COVID, but because of the impact of the states and the cities dictating in terms of how many, how they can open, what they can have. So part of this, the act allows them to not, the other industries, and it all goes by the, as Ramit said, the National Association NAICS code is, if it starts with 72, they can actually apply up to 3.5 times the payroll versus compared to 2.5 times the payroll. And that's for the PPP loan. And for, for clients who are looking to, obviously, this is, they should look at all their businesses have been impacted but with a 25% reduction in year over year, in those industries. So they have the opportunity in this day, when they did in first round and the second round, is just to make sure that they have the documentation in place and apply for it.
Okay, thanks, Sanjay. Just to add to that, it's not only the hospitality, and you can correct me, it's not only the hospitality or the restaurant industry, the travel industry, the airline industry, the travel agents, anybody in that particular arena who've been hit the hardest can qualify for this 3.5 times the monthly payroll, correct?
I believe anybody in the 72 NAICS
72,
code.
71 category, and then there are a couple of other NAICS codes. Right?
Ones,
No, I think it's just limited to 72, Eric. Yeah.
It's only limited, okay.
Yeah.
72, yeah.
Okay, so let me.
So, I mean, I think, Eric, do we have any more questions about PPP at this point?
Yeah, I am going through it because there are a lot of duplicates and some of them we
Okay.
already covered. So I'm just doing it. But if you have anything to add.
So the other thing as a panelist, that we're all of us are in related fields. One of the things we just wanted to educate the community on is the part of this act is the benefits of SBA loans that has been, that's part of it that will allow businesses to grow, to acquire new businesses, to buy properties, and take advantage of the funding that the financial institutions along with the SBA are offering. So Eric, can you give us a little bit more detail? I know this is something that near and dear to both our hearts, but I know it's something that you work very closely with. So if you can give us an idea of what changes are coming with the SBA loans starting February 1st.
Right. So thanks, Sanjay. Thanks for bringing that up. With this stimulus CARES Act 1, which was passed last March, and then the one recently got passed around Christmas, PPP was eligible, and everybody, most of the business, majority of the small businesses got it, and even the mid-sized business got it. But a lot of people were not fully aware, and I have to say that this was just a small, I don't want to say small, but one portion of the CARES Act. The other one was, like you mentioned, the SBA loans and all that, and which is very close to me and close to you when this is all we do, is I've been doing this for 20 plus years. This is an opportunity of a lifetime. And I literally going to repeat that word. This is the opportunity of the lifetime. If 5, 7, 8, 10 years ago, when we used to sit and we say, how can SBA help the community? And we would dream of these few things, which is happening today in the SBA lending industry. So number one is the SBA or the federal government will pay, I'm going to break it down in 3 segments, either 3 months or 6 months or 8 months of your principal and interest payments for up to $9,000 if you have an SBA loan. So for listeners who are listening, if they have any SBA loan, I'm sure they already took an advantage back in March where the government paid 6 months of your principal and interest payment, and there was no cap at that time. Now, starting February 1st, for the next, if you have a regular business owner and you have an SBA loan, whether it's a 7A or a 504, the government will pay 3 months of your loan payments for up to principal and interest, up to $9,000 principal cap. Any new loans which get approved from February 1st till end of September 30th of 2021, SBA loans will get 6 months of that principal and interest payment paid by the Uncle Sam, paid by the government. So imagining you taking a $3 million loan on a 10-year amortization, and your payment is $18,000 a month, $9,000 of that, which is principal and interest, going to be paid for the next 6 months by Uncle Sam or by SBA. Now, certain industry will get 8 months of that, and those industries are restaurants, travel industry, and all those categories are going to get that. So that's really number one big saving. The second biggest saving is, Sanjay, and as you know, when we do a 7A loan, there is an upfront SBA guarantee fee, which depending on your loan size can vary from as low as 2.5% to up to 3.75%. So on a loan size of $1.5 million, we're talking almost $37,000. That fee has been waived for the next 6 months. And normally we finance that into the loan, so the borrower doesn't need to come out of their pocket. But now we just have to, that line item is eliminated, and imagining your loan amount or your closing costs got reduced by 3.5% of the loan amount. And then thirdly is the SBA have eased up their guidelines when it comes to the SBA loans. Earlier, the SBA was insuring 75% of the loan amount. Now they have gone up to 90%. So what that does is all the SBA does is it insures a loan. It never gives the money out to the borrower. The monies are given out by the local banks. So now a bank who now has an insurance certificate for 90% to cover the loan instead of 75%, guess what? They became the guidelines, they feel more comfortable with the loan. And if your loan is below the margin line, below the guidelines, now guess what? Your loan is eligible. So that gives underwriting a very peace of mind, and banks a very peace of mind that now they have 90% insurance on the loan. Thirdly, as I said, certain other aspects of the underwriting guidelines have been loosened up because the government wants to help the small business community. I mean, remember, small business community are the backbone of this country. So with SBA now giving them all these added features, this is the time. I mean, literally, I'm telling you, this is the opportunity of a lifetime. If you have not decided, or if you are thinking about it, this is the time to go out and get an SBA loan. The rates are historically low. So you can get a 10% down payment on a commercial loan or an SBA loan in low 5s or even high 4s. So this is a window of opportunity. Thanks, Sanjay, for bringing that up. We do have other questions. So let me just, I know some of them are duplicate. Okay, so we have a question from Indy. Ramit, if you can answer that. Can the loan be used for employee compensation outside of wages? For instance, Section 162 bonus plan or a 401k profit sharing or a defined benefit plan?
So what I remember is, as per the IFR, is that you can, and Chetan can correct me on this, so basically you can use the payroll, basically the state and local taxes that you have paid on that payroll, plus you can take any tips you have paid to your employees, plus the health and medical benefits that you have paid on behalf of your employees. I do not know if Indy's question regarding defined benefit plans and that part is covered or not, but one clear guideline is that you can only take wages for up to 100,000 per year per employee. So I think if it exceeds that, then it's anyway not eligible. Right. So I will have to go back and look on that piece, but I think it is not included. Okay. But Chetan can correct me.
Chetan, would you like to add something to it?
Yes. Well, I would say is that any contribution to retirement plans, contribution plans, employer contribution, okay, any contribution to group insurances, health insurance, dental, vision, then any contribution on the state taxes, state unemployment taxes, all can be included into payroll cost. But as Ramit said, there are limitations. You can go up to 100,000. But yes, all these employed contributions can be added up on your gross payroll, that gross payroll that you report, which is subject to Medicare on your 940 or 941. So you pick your gross payroll, but you select the year which give you the best benefit. You pick either the 19 or 20, see which one you have the best payroll cost. Then on top of that, you add it up, employer contributions for health insurance or other group insurance you have there, and then you add it up your 401k, retirement plan contributions, you add it up state taxes, and then you look at your average monthly payroll cost, and then depend upon your NAICS code, either you're going to qualify for 2.5 months. If you're in a hospitality, maybe 3.5 months average payroll cost, which will be your loan amount.
Okay, thank you, Chetan ji. Ramit ji, is a single member LLC eligible for round 2?
Yeah, if it's a single member LLC filing as a Schedule C, they are eligible. And if they have no employees, basically, as I mentioned earlier, they can take the net income figure, cap it at 100,000 and divide it by 12. And basically, they're eligible for a maximum loan amount of 20,833.
Right.
So close to about 20,000. And even if they are, let's say, filing as a 1065, then they basically take their K1, and cap it at 100K and then divide it by 12. So basically, their loan amount is capped at around 20,000.
So I just want to make sure our listeners understand it. Obviously, if they have a Schedule C on their 1040s, yes, and their gross number is, I'm just saying hypothetically, 200,000 after some expenses, they show the net can max be 100,000. Then you divide that by 12, which is 8,333. And then we multiply by 2.5, correct?
Yes, yes.
But you also added a just feature that, what if that 1065 gets a K1 for $100,000? Is that eligible still for the PPP?
That is also eligible, yeah.
But there is no, keep in mind that that's all their income was on K1, not on the not as a compensation of officers.
Yeah, so it still qualifies as income, right, for a single member LLC. So they can treat it the same way as a Schedule C.
Okay. And if there are multiple member LLCs, two member LLCs, how would that K1 be treated?
So basically, then you look at the K1 for each individual.
Individual based on their percentage, correct?
Yeah.
Okay. Okay. We have a question from Sandy. The loan, when the PPP round 1 was done, it was payroll plus other expenses like rent, etc. So how is this calculation done on this time in the round 2, PPP round 2?
So is that for Chetan or for me?
For you, Ramit.
Okay, so I believe the calculation which is being done as per the IFR, if someone is applying for second draw, is basically what Chetan and I just explained earlier, that you have the payroll plus all the other eligible expenses like state and local taxes, the employer contribution to, medical insurance, health insurance. I don't think rent is included in that. Right. And because I'm pretty sure, because I just read the IFR before coming on this panel, I didn't see rent included in that.
Right, they're not. From what we understand is you do your monthly payroll times 2.5 times.
Yeah.
And 60% of that can go towards the payroll, and the 40% can go towards rent, utilities, or mortgage payments, or utility and other expenses.
Yeah.
Yeah. Okay. Sanjay, you've been helping a lot of our small businesses for all these years. Where do you see where do you see our next 6 months or year 2021 for small businesses?
I think in our community, this is a great opportunity for people who've been either, who have existing businesses and have been looking for to purchase real estate for their own business. A great opportunity because the rates are historically low, and rather than paying rent and find a place of your own where you can build some equity into it, the financing options are phenomenally very good out there for people to take advantage of. Second, I think with the new administration, we have a lot of people in our community are in the construction, the contracting, as minority business owners. We'll have a lot of opportunity, especially in the infrastructure, the money that's going to be poured into infrastructure. is to go out there and bid for these jobs, whether you are with for city and state jobs. Those are going to be out there for people to take advantage of. And work with your financial advisor, work with your CPA, work with Ramit's company, with Biz2 Credit, work with your banker, or with you, Eric, in terms of guidance of how they can leverage themselves. And I think that's the word that people in the business community right now should look at, is how can they leverage themselves to take advantage and grow the business, because once the vaccine is out there, the business, are we going to be back to normal the way we were? Yes, the social distancing and the mask wearing, I think will be there for now, because this will become a common cold virus. Every year we'll be doing something, but business will be back as usual.
Yes.
And client and business owners can take advantage of this to benefit themselves right now. And as you said, yes, this is the time to sit back and say, how can I take advantage of the resources that the federal government is offering me to grow my business? Not, obviously payroll is one issue through PPP, and look at that one, but also other ways of saying, there are opportunities right now for me to take, other people's money at very low rates for a long time and take advantage of it.
Thank you, Sanjay. We have another question from Mr. Bindra. He says, does the SBA loan, if I get property for investment purpose? I guess I can answer that. So Bindraji, SBA loans are geared for owner-occupant businesses. However, I can just clarify that you as an owner have to get advantage of that low equity injection or low down payment of 10%. You have to at least occupy the commercial space or the building or space or whatever that is, warehouse, retail, or whatever, 51%. As long as you occupy for 51%, and you can show that you're expanding your existing business from location A to this new property, which is location B, as long as you can document 51% of that, you are eligible. But if you're gonna say, look, I live in New York, my work is in New York, I wanna buy a property in Carolinas or California, and I wanna use the 10% down less, then it's not eligible. If it's strictly you're gonna do it for investment purpose, the SBA loans are non-eligible. We do have another question from Mr. Kohli, and I guess it sounds like a little repetitious, but Chetanji, would you just clarify the tax liabilities does the small business may have from this loan, if any?
Yes. So if the loan is the money you're receiving, irrespective it is forgiven or not, the money you are receiving here, it's not a taxable money, number one. So, and then if you are using that money for qualified costs, you're paying your payroll and other qualified expenditures, mortgage interest, rent, and utilities, and then there are 4 more costs are added into second draw that you can, pay your operational expense, you can pay your supplier cost, you can pay, expenses for damages you got incurred during this COVID, or from any damages happen to the property, or you have COVID compliance costs. Those are 4 additional expenditures you can pay. And those all expenditures you're making are tax deductible. So there's no liability. I would say there is double dip on tax benefits. You're receiving a money, usually when you receive a money, IRS tax on it. And then they don't, back in December, they were not allowing to take a deduction against expenses you are paying through this borrowing. Have a double benefit.
Okay.
I would say, in terms of liabilities you have, if your loan is not forgiven, then you owe the money to the lender.
Okay, got it. Sanjay, we have another question. The opportunity for the SBA loan, which we have been talking about, can it be taken for working capital and towards the payment of new hirees and also for the future payroll cost? I'm talking about not
Sure.
the PPP loan. We're talking about the SBA loans, working capital.
Right. So the SBA has a program called the SBA Express, line of credit or an SBA Express loan. The SBA Express working capital line of credit prior to the CARES Act last year was limited to $350,000.
Mhm.
But part of the CARES Act, and even now, it's been raised up to $1 million.
Correct.
So for working capital purposes, that is an opportunity where, so the lenders will first look at traditional lending, and they look at their different criteria. Can the companies, the biggest one of them is debt, obviously debt service. The second then becomes its collateral. So if there's a shortfall on debt service or if there's a shortfall on collateral, the lender will look at providing the SBA for working capital, SBA Express, as an option to the borrower. So yes, there are options available on that, and especially now, as I said, it's not 350, and it helps the bank that the normal requirement would be where the borrower wants 500,000. We're looking for a collateral of 80%. The collateral is only 70% or 60%, but the cash flow is there to support it. We will use that product as an alternative to discuss with the client. Yeah.
Okay, thanks, Sanjay. Ramit ji, we have another question from Karima. She said she has a corporation and she has taken a paycheck for herself.
Yes.
However, in the last 4 months, she has not taken a payroll. Can she still apply for the PPP loan? And would she be eligible for that 2.5 times?
So
she has taken a payroll, if I understand her question correctly. She has taken a payroll in 2020, but for the last 4 months, she has not taken a payroll. Basically, the last quarter of the 2020, she has not taken a payroll.
So I think it just depends, and you said she's incorporated as a C Corp or?
It's a C Corp. Yeah, it's a Corp.
So I think then it depends. If she's using 2019 as a base year, then she has to be in operation on February 15th, 2020. And then she can use 2019 as a base year and then apply based on that, And it will be 12 months of 2019 and then divided by 12 and then multiplied by 2.5.
Correct. Yeah, and I would like to add something to what Sanjay was saying about the working capital. Obviously, with the working capital limit, now the 350 express loan have been given to $1 million. So it gives lenders more flexibility. And that working capital, I just want to add it can be used for the new hires, for the new inventory, for the accounts payable, and all that. So it's just not limited to new hiring for any employees, or of course, the idea of this whole SBA is to create employment. So the more employers or more employees you hire, the better the SBA feels, because that's at the end of the day, that's their program, that's their their main agenda to increase the payroll. I mean, to increase the employment. But that working capital can be used for numerous things. Obviously not for Atlantic City, but except of that, it can be used for numerous things in the business. Guys, please send in your questions. I know some of those questions are duplicates, so I'm not repeating that. So Ramitji, I know we already asked Sanjay on all this thing. We all are very optimistic about 2021, and you've been in this business. What are the pitfalls for 2021 you may think which our listeners should be aware of?
So Eric, I think there's one more question that is there on the chat box. I think
maybe
we can answer that first.
Maybe I missed it. Sorry.
No problem. It's not in the Q&A. It's in the chat box. It says if one of the partners is a foreign entity with more than 20% share, but not majority, can that business apply for PPP or EIDL?
Yes, I'm sorry. I guess I looked at the wrong. Yes, it's from Mr. Siddharth, right?
Yeah.
Yes.
So you can
answer that.
Yeah, so you can apply. Basically, even if one of the partners who has more than 20% share is a foreign entity, so you still can apply for PPP. The main thing, there are two main things that you have to look for is that the signer who's signing the officer should be here in the US, and plus the employees for whom they're counting the payroll are based in the US. And then the third thing is that the aggregate number of employees between, let's say, US and any other country that they're affiliate, it should not exceed 300 or 500, depending upon their industry.
Correct. So the key factor is the employees has to be based out of US.
Yes.
That's the key thing. And the owner could be a foreign entity, or actually I should say could be a foreign national. But the main thing is what they're looking for is the employees for whom the payroll is being, this loan has been given, has to be based out of US. And then depending on this, 300 for PPP round 2 or 500 for PPP round for one. Okay.
And the max loan amount this time is capped at 2 million. Last time it was 10 million. If they're applying for draw 1, then it's still 10 million.
It's still 10 million.
And if they are in the hospitality or the restaurant business, then they can have 300 per location. So that is the other determinant as well. And then if they have like, let's say someone has multiple locations in a franchise, then across a group, their total loan amount cannot exceed $4 million.
Correct. Yes. Thank you. So our listeners, I'm urging, please keep sending your questions. We have a lot of duplicates, and I believe I've answered anything, or if I've missed it, please send us through our chat or through, we have 2 chat sessions going on, and please send us. So Chetanji, I also heard about, with this CARES Act, employee retention credit. Would you be able to highlight a little bit on that? What is the employee retention credit and how our small businesses can take benefit of that?
Yes, so there is a parallel opportunity with PPE Loan 2. Prior to this PPE Loan 2 Act that was passed on December 27th, you cannot take both retention credit as well as deductions for forgiveness for your PPE loan. But now you can take both. So you have to plan, like in terms of retention credit, what you get is for 2021, you can get maximum 7,000 per employee. Okay, that is 70% of the qualified cost per quarter. So each quarter you can take 7,000, but there is again eligibility criteria there. You have to have a 20% dip in your revenue each quarter compared to last year. So if you have that dip quarter to quarter, you can compare it that, compare relative quarter of 19 to 20 to 21. If you can prove that there is a 20% dip in revenue, the revenue drop, and then you can use the employee's cost, which you are not paying from the PPE loan. So you have to segregate those. The money you are using from the PPE, that will not going to qualify for retention credit. So you have to plan it. Either you first quarter, you just take the retention credit, and then the second quarter, you take the PPE loan forgiveness. You take that loan and apply for forgiveness. But if you're looking for forgiveness, you have to segregate the employees, that falling employees' wages, I'm going to use it for retention credit, and then the other employees, I'm going to use it for my PPE loan forgiveness. Either you can pick the employees, it's all planning that you have to work with your professional, or you can pick it up, the quarter. Let's say, okay, first quarter, I just take this, my PPE loan, then the second quarter, if my covered area, which, once you take the loan, you have to spend the money, within 8 weeks or 24 weeks. So you plan it out. If you're not taking a loan, because your last date to take this loan is March 31st. So if you're taking the loan at the end of this quarter, then maybe first quarter, whatever cost, all the salaries you paid to your employees, as long as you can prove that 21 quarter compared to last 20, that you have a drop of 20% revenue, then you can take 7,000 each employee. So if you're, let's say, 10 employees and you have paid them wages, maximum you can get $70,000 credit. So it's equally strong as PPE loan forgiveness, that money we are receiving. So you can double dip to be short if it is planned with the professional.
Thank you. And of course, we would recommend all our listeners to talk to their lenders or to their CPAs and accountants, or you can reach out to any one of us. And our information can be obtained on Punjabi Chamber of Commerce. And I strongly urge our listeners to go on our website and also see we have a lot of professionals in the financial field, from CPAs, from attorneys, lenders, who can help you with that. We have another question from Mr. Son Brinder. He has a learning center. However, he does not give out the payroll. So Sanjay, help me out here. So he has a learning center, but he does not give out payroll. Can he still get PPP too?
I don't know how, Chetan, correct me if I'm wrong. I don't know how you qualify for, it's a payroll protection program.
Right.
Correct.
Correct.
So if there is no payroll, there's no documentation to support, how much revenue he needs to support the business. That's all.
But I think,
So-
Sanjay, there could be like if they have no payroll, but if they have single member LLC or something, then.
Right. In the event they have a single member LLC and
Right.
or they have a Schedule C, they are
Yeah.
eligible for the
Right.
for the
Okay,
payroll.
his business is an LLC, but we don't know if it's a single member LLC.
Correct. We don't know that.
Mr. Solin, if you can, if you want to reach out to, to answer that question, is that if it's a single member LLC, depending on how it's structured and whether you show a Schedule C or not.
So
It's him and his
he
wife.
just texted. He said it's him and his wife on the.
Yeah,
on
I
the-
think
would like-
Chetan wants to add something. I think.
Yeah,
Yes. So whether it is a single member or it is a multi-member LLC, as long he has earnings, either the earnings in a single member showing on a Schedule C, still you can eligible. If you have Schedule K1 coming from multi-member LLC, yes, those earnings you can consider it. If he does not have any income for himself and there is no employee, then it's a different scenario. But if it is a multi-member LLC, he can still take earnings subject to self-employment tax from his Schedule K1 and use that earnings for getting eligible for PPE loan. So yes, as long he has earnings on Schedule K1 or Schedule C, he would be able to.
And one more thing I wanted to point out to all the attendees is that, SBA has come out with very clear guidelines, they're on sba.gov. So if you look for interim final rules for PPP for the new round, so a lot of helpful information is available, and they released over the last couple of days, an interim final rule on calculating how to calculate your loan amount for second draw as well. So I think besides your CPA, you should also look at the SBA website also, because they have very clear guidelines as well.
Kuldeep, Mr. Kuldeep has a question to refer to Chetanji. The 20% dip, actually it should be 25% dip. Should it be in all 4 quarters, or could it be just 1 quarter or 2 quarters of 2020?
So the 20% dip is for retention credit. 25% dip is for PPE loan qualification. Okay, so if he's asking about PPE loan, then you can have either annual basis drop for compared to last year. You're comparing your 20 compared to 19. And if relatively there's a drop of 25%, either on an annual basis or a comparative quarter. So if you pick a first quarter of 2020, and then you compare with the first quarter of 19, as long in any quarter relative to each other, there's a drop of 25%. Then if there is a drop in revenue, then you're eligible for PPE. However, on the retention credit, the drop is 20% in revenue. Last year, it was 50% drop. So it's significantly improved for retention credit this year. You can still take the retention credit retroactively for last year too, but then you have to have 50% drop in revenue for the year.
Okay.
So I would suggest talk to a professional, because there are a lot of opportunities this year beside PPE. You have other credits are available, but then this time there is planning needed.
Got it. Thank you, Chetanji. We have a question from one of our PCC trustees for the SBA loan. How many months government is, okay, so basically for how many months the government is funding the new loans, and for all new businesses or distressed businesses only? So I can answer that. Vinny is one of our founding trustee member. Vinny, basically any loans, new loans, if we are talking any of the new loans, any loans which is going to be originated or approved electronically from the SBA system starting February 1st until September 30th, 2021 are eligible, where the government is going to pay 6 months of principal and interest payments up to $9,000. And certain businesses like restaurants and all that will get 8 months, or hospitality industry will get 8 months of that. So it's for the new businesses. And when you put a question mark saying distressed businesses only, no, it's for any business. A startup business who's starting from scratch will, based on projections, we do the loan based on projection, is also eligible for that. It doesn't need to be a distressed or any business, new business. Ramitji, we have another question for you, which says, besides the Form 940 filing, could you add K1 income too if the only owner run no additional employees? I guess it's a repeat. What are the repeat to? But they just want to clarify that one more time. That
yeah, so you can use the K1 income, as we had originally said,
You can use the K1 income, right?
Yeah.
And I believe I skipped one question up there. Let me just make sure. Okay, so I guess there is a confusion, and they said if I did not apply for EIDL in the first round, can I apply that for now? So EIDL, economic injury disaster loans, we also help several hundred, over 1,000 people, 1,000 of our borrowers. So that's different than a PPP loan. EIDL is a loan which you get it from SBA. The normal terms are 30 years. Interest rate is fixed at 3.75% for 30 years. First 12 months, the payments are deferred. And depending on your 2019 tax returns, you can get up to $150,000. The only provision which the new law, which got passed, the 900 billion in September, was during the EIDL period, the government was giving a grant of up to $10,000, which is forgivable. It's a grant, it's not a loan. For $1,000, up to $10,000, it was $1,000 per employee, but they capped it at 10. So what happened was the government ran out of that funding back in June and July. So a lot of businesses who applied for EIDL after that did get their EIDL loan, or is still in process, but they never got that up to $10,000 grant. So they are getting that grant now as we speak. That's the only provision. Everything else is remained the same on the EIDL, and it doesn't need to be confused by PPP loans. I'm just scrolling through. I just want to make sure if I didn't miss anybody. If not, then I guess we are at almost at 1 hour time frame. Ramitji, any last? Let's summarize our this webinar. Any last couple of sentences towards the end?
No, I would say that apply for PPP as soon as possible, because this time, unlike last time, it is taking SBA anywhere between 2 to 4 days to approve the loan once the lender approves it, and I would say all the lenders are pretty backlogged right now because they've received so many applications already.
Correct.
So basically try to do it as soon as possible. You can come to us, or basically go to your local bank, but try to do it as soon as possible, because the funds are limited, and then a lot of people are already applying for it.
Correct. I would like to add something to that. We also do a lot of PPP loans. I'm on a conference call with SBA once every 2 weeks. So this morning's call we had, they already said that in the first 1 week, 60,000 applications were received in the electronic system, and they have electronically approved it up to $5 billion. So right now the amount is close to $5 billion, but 60,000 loans have already been conditionally approved by the SBA as of the first week, and we have time. But again, we don't believe the fund's going to run out, but at the same time, we're encouraging all of our businesses to speak to their local bank or speak to one of us and help. We will help you with that. Sanjay, any last minute, any piece of in summary, any advice?
I would say just, trust speak with your advisors, whether it's a banker, whether it's the CPA, attorney, lender, whoever you have faith in, whoever you've had a communication with, go through the Punjabi Chamber membership directory, reach out to, the people that are in there. There are lots of good sources to connect to. And take advantage of the opportunity that's out there right now, to grow your business, maintain your business, and if you have any questions, reach out to us, but take advantage of it. This is an opportunity that's, where the rates are, where the funding is, that's available. Don't miss that out.
Right,
And
absolutely.
especially for sole props and LLCs, the SBS system is throwing out a lot of errors right now based on what they use in draw one. So especially if you're doing sole prop LLC second draw, then I would say apply sooner than later, because there might be issues that might pop up that take time to get resolved.
Correct. Yes.
Yeah.
Also, we have one more last, I think it's one of the last questions. Can we have email addresses? So yes, this call is being recorded, and in the beginning, or our host will be sending out an email to all the listeners who have registered with all our panelists' contact information. So you please feel free to reach out to us once. You'll be getting that email later today, and we'll be more than happy to help you. Chetanji, any last minute in short summary, would you like to say?
Well, I would say this, where on earth you will find a loan which is a forgivable, number one.
Yeah.
You are paying only 1% interest. You're using the money for 5 years. No personal guarantee, no collateral, no credit score required. So go take it. Be cognizant about 3 things. Make sure you are eligible. Reach out to a professional. Understand the framework. There are criteria to be eligible. Understand the framework for getting the maximum borrowing. So, all the conditions are there you need to fulfill. Then once you get the money, then, be mindful in using the money. There is a covered period. You have to spend the money within 8 weeks or 24 weeks. So that's where people are making a lot of mistakes. They're not even aware which period they're picking. Even though they're using on a qualified cost, but they're, messing up with the periods.
Yes.
And then once you are using the money, make sure you're spending a minimum 60% on the payroll, and the rest you have other qualified costs. And then also retain your employee level as well as their salaries. And then last thing I would say, do not forget to file your forgiveness within 10 months, the period you picked up.
Yes.
Yeah.
That's my take on it.
That's a great point, Chetan. I'm gonna wrap it up soon. So that forgiveness piece is key. So I want to thank Eric, the team, Ramit, Sanjay, Chetan, so much for bringing us together. This is really informative. This is a very new program, so we're all in this learning process together. This has been a terrific event. This plan just came out again for the second time 10 days ago. So there are a lot of loan applications. Again, we'll provide the contacts if anybody's interested to follow up with any of the panelists. The event link and everything else will be available to all of the attendees. Again, you could check out the Punjabi Chamber. We couldn't do this without all of our community leaders, so we really appreciate this. Thank you, everybody, again. There's a lot more Q&A. We're going to follow up with panelists and provide additional FAQs at the end and later on at a later date. So thank you again, everybody, and once again, enjoy.
Thank you. Have a good night.
Thank you.
Be safe.
Thanks
Be safe.
for having
Be
me.
well.
Thank you.